Hello, everybody, and welcome to Crossing the Line with Greg Heym. My mother's favorite show. She doesn't watch it, but it's her favorite show. Hi, Mom. Anyhow, I am the aforementioned Greg Heym. This is Loan Daddy himself, Scott Nadler, CrossCountry Mortgage. How you doing, buddy?
I'm great. It's good to have you back.
We got raised big hands on claps, and Lena here as always. It's great to be here with you as always.
Like that, Lena was waving like anyone could see her.
See? But it's great to be back. I was away last week. That's why we didn't have a show. I was in Texas having the time of my life. Went there to see AC/DC because they're not coming to New York. They come all the way from Australia. They can't stop in New York on the way back. But it was phenomenal.
The show? Yeah.
AT&T Stadium, Jerry World. If you've never been to that stadium, Cowboys have the best stadium in sports. It is just like a testament to perfection. And the fan experience there, I've been there for football games and a couple of concerts now, and it is great. Concert was really loud, which you expect. And
What was the highlight?
I mean, for me, the two songs that really resonated the most are Highway to Hell and Dirty Deeds Done Dirt Cheap. I mean, neither of which was sung by the current lead singer. You know, Bon Scott died about 40-something years ago. But
I'm nodding like...
You were, I know, he's like, I wasn't even born 40-something.
Yeah.
What are you talking about?
I didn't know this.
You know, this band's been doing this for over 50 years. Most people may not realize they have the second highest selling album in music history. Back in Black is only behind Thriller.
Wow. With
With over 50 million reported sales. That's amazing that a hard rock band is that popular.
Where's Taylor Swift on that?
She's in there, but nobody cares. It's kind of like what Taylor Swift is to 20-something or teenage girls. That's what AC/DC is to middle-aged guys.
By the way, there is a video of Greg with his nieces in the car driving, where his nieces are in the back seat, singing their hearts out to Taylor Swift, and Greg just with this, like, the pan in his face, like looking like absolutely miserable.
Well, I went from Back in Black to three of my nieces screaming in my ear.
It
Taylor
was
Swift
your
lyrics.
nightmare.
I mean, they're adorable.
You look
I
miserable.
love them. So that was the other part of the trip. My son and his cousins have been doing these cousin trips where they go to Texas because my brother has a really nice pool and weather's usually nicer there. And so we had 7 of the 8 cousins together. The oldest couldn't make it. So that was fun. And, you know, they did a lot of things together. You know, the morning of the show, we were at the stockyards in Fort Worth watching them stampede the cattle because it's something to do.
Very Texas.
You don't realize those horns are like 7-8 feet wide for some of these cattle. They're huge. Wow. Thank God they don't actually stampede. We might be in trouble.
So things are actually bigger.
In Texas, you may have heard.
Yeah.
But just a great show and a great visit. Always nice to see family. No matter how much my nieces live to torture UG, as I'm called, which actually they think it's now become Uncle General. They claim I'm a little bossy. So I can't help it. It's a grumpy in me. You just call me Uncle Grumpy too while they're at it. I shouldn't give them the idea. It'll put the notion in their head.
They have options.
Well, they're not watching now. Well, hopefully they're in school. That should be where they are. So your weekend was good?
It was great.
Now, did you do any Scott Nadler things?
Yeah, I was in St. Bart's on a yacht.
Of course you were.
Nick now.
Speaking of Knicks, I'm going tonight.
Oh, yeah?
I am
Look
going.
at you. I'm excited for you. That's going to be fun. The Garden's going to be rocking.
It always is when it's playoff time.
Yeah,
It's
it was typical Knicks. We were miserable for 3 quarters, and then it was funny. I was with a close friend of mine, and we're going into the 4th quarter. We're not looking great at all.
No.
And he goes, they should bench Brunson and put Campaign in. And I'm like, words said by no one ever.
Right.
This is a miserable plan. And what happens? Campaign comes in and
turns into Steph Curry.
Saves the day. So it was.
We score 3 touchdowns. We get a 21-0 run.
Exactly.
That's great.
What a roller coaster game.
Well, it's great, and playoff season's always great. I mean, there's been some blowouts so far, but it's always fun.
And the celebrations on 7th Avenue after a Knicks game is incredible. I mean,
see, I don't know this. I'm usually racing for a train.
Oh, you should stick around for it.
It's a school night.
Stick around for it, Greg. It's going to be fun. It's going to be worth it.
We'll see.
You'll get some really good content too.
Yeah, well. So, and I can't forget to say, we're coming to you from beautiful Studio 1873. So we have a special episode this week, which I'm only going to tease now, because right now we have to break for this commercial message.
Your dream home is closer than you think. I'm Scott Nadler, VP of Mortgage Lending at CrossCountry Mortgage, and I'm here to get you the perfect loan to match your perfect home. From first-time home buyers to seasoned homeowners, I've helped clients make their moves with confidence. Ready for a smooth, stress-free home buying experience? Let's get you moving today. Call me and let's turn those dreams into keys.
Hey, it's Stephen Bailey from Roadway Moving and Storage. As an official moving partner of Brown Harris Stevens, we know that your clients deserve more than just a move. At Roadway Moving and Storage, we turn moving into an experience they will love. From specialized services to a white glove treatment, we've got it all covered. When you choose Roadway, you're choosing a peace of mind for your clients. Plus, our referral program is the most rewarding in the industry. Want to learn more? Shoot me an email at steven@roadwaymoving.com or visit roadwaymoving.com.
All right, so we're back. So, we're trying to find themes in shows when we can, and there's so much data coming. I was talking to a reporter when I was in Texas who was complaining that she kept starting and then deleting articles because the news is changing so much and nobody knows what's going on. So we're going to have what I'm entitling the Marvin Gaye episode, Scott. Do you know what that means?
Sexual healing? Is it?
That would be amazing if we could accomplish that too. But when you talk about economics, that doesn't sound like it's going to work. No, it's the What's Going On.
Oh, okay. That makes more sense.
Seminal song and album,
Yep.
one of the great albums and songs of all time. We feel like we're living in a bizarre world. And for the three people out there that doesn't know what that means, that's a fictional universe in DC Comics. I actually look where the origin, because it was a Superman thing, it was bizarre, where everything is the opposite of Earth.
Yeah.
And maybe that's not a bad thing, the way things are going. And this started for me with the jobs report. The March jobs report was much better than expected, which should have, raised rates because we worry about inflation picking up again. Mm-hmm. But the exact opposite happened. 10-year went down. It's like, wait, that's not supposed to happen. That's not good. Then we saw, as the trade war started to take hold, that the stock market was crashing, which usually brings people into bonds, which lowers rates. And no, rates started going up because there was a concern about the U.S. economy and the value of the dollar and all this stuff that's going on now. And now that there's talk of the administration trying to remove the chairman of the Federal Reserve, rates are going up again. So this is the kind of world that we're living in, Scott Nadler. How do you sleep at night? on a mattress, firm mattress, as the commercial says.
Look, there's chaos, there's uncertainty. Those are the two most spoken words right now in all these articles that these writers are writing. So, there's a lot of confusion. And even when you hear the brightest minds, from Ray Dalio to Jamie Dimon to Larry Fink, there's confusion amongst them as well.
Those three guys keep saying the word recession.
They are saying recession a lot.
Yes.
And a lot of them say recession a lot, where, at some point they're eventually going to be right. But we are in the thick of things right now. And there's a lot of, it's the uncertainty has many different levels of it, and it hits companies, it hits individuals, it hits governments. So ultimately the dust will settle at some point, but I think every sector needs some semblance of, they need leadership to kind of show them what actually is going to happen, because businesses don't know, should they be expanding right now? Should they be contracting? It's very, very hard.
It's funny, we always say that, you remember the scene in Back to School, I think it was when Rodney Dangerfield is on the phone, and he's like, everybody's selling, then buy. Everybody's selling, then everybody's buying, then sell. And that is there. And we've talked about embracing the chaos, and, for home buyers out there, it's not a bad time to take advantage of a seller who's a lot more nervous than you are, because they're out there, they're trying to sell. That you have that leverage. It's not going to be. We all talk about certainty. We all want that. It never has existed in the history of mankind. That's something else we forget, that you could point to so many things that have happened in just the last 20-something years.
Yeah.
Terrorist attacks, natural disasters, financial crisis, pandemics.
There's always uncertainty.
Lions and tigers and bears. Oh my! Come on.
Going back to that though, I just had a client who makes an offer on a property and gets the offer accepted, and then the markets fall apart. So they call me and say, you know what, we thought about it.
We're going to lower the offer? They're pulling it.
We're going to back out entirely. And I said, let's think about this for a second. And we looked at the home. The home was on the market for 200 days. So do you think you can go back to the seller and maybe get a credit from them? So they ended up requesting specifically a $30,000 credit, okay?
Right.
For this specific loan, it was like a $600,000 loan. $30,000 represents mortgage rates are at, let's call it for their loan, right around 6.5%. $30,000 represents for them having an interest rate of 5.5% for the next 6 years. It's a big deal.
So that's why we have Scott here, because he breaks it down like that.
So
puts it. No, I tell people, I rip that off from you all the time. Stop being obsessed on the rate. If it changes by 25 basis points or look at how the payment changes.
Yeah,
because that's what really matters.
They took a step back and said, this makes a lot more sense. Like, take advantage of the fact that the market's falling apart. Go back to your seller and say, hey, many people are going to feel the way that we're feeling.
Do you really want to go back on the market now? Do you want to go back
on the market right now?
No.
So, but it's hard. Look, you have to have the stomach for it. But you have to look at it as an opportunity. These are people that were looking for home, for these specific people, looking for them for 8 months. And they eventually found something that was their dream home. And you're going to let it fall apart because one day in the market or 2 days in the market? Let's take a step back. Well,
the other thing too is that, the reaction, especially in stocks, is always worse than the actual event. I always say at the time, it's either way too upset or way too happy.
Right.
And that's why it's quick to correct sometimes. So there's an article in today's Wall Street Journal by Greg Heym. Love guys named Greg. Don't meet enough of them these days.
You're not biased?
Well, me and my son, and there's another Greg here, so we talk about Greg things.
2 G's or one?
Me and my son are Greg.
No, I know that, but how do you feel about people that spell it with?
Well,
2
it wasn't
Gs?
their idea; it was their parents' idea.
But they could change it.
2 close friends named
It's like
Greg
if I meet a Scott
up.
with 1 T, I'm always like a little skeptical.
Yeah, no, I had 2. My closest friends were named Greg because it was a popular name in the 70s. Hasn't been very popular since. And one was the 2 G's on the end. It's weird because I've seen people spell my name that way. The weirdest spelling is Greg Nettles. The baseball is Grai. It's like Craig with so
that's weird.
But he's a great third baseman, so who cares? By the way, speaking of the Yankees, I have Ron Guidry here and Alfred E. Newman, but we have a new bobblehead in the middle.
I was waiting for you to mention it.
The great Rick Pitino.
He deserves it.
Who has made St. John's relevant again.
Yes.
All right. So anyway, back to the Greg Heym article. The title is "The President is Everywhere Except in the Economic Data." So, we got tariffs, spending cuts, deportations, locusts, droughts, all that stuff.
We got it all.
We keep hearing about it 24 hours a day, but it's not showing up in the economic data. Now, you could argue it's too soon, and maybe that's true. But if you weren't on social media, he points out, and you're only looking through the economic releases coming out monthly, you wouldn't think anything has changed. You have, everybody's saying that hiring is going to slow sharply, inflation is going to pick up because of tariffs, which is not true. It's never been true. But job growth is averaging what it was before. Unemployment rate is still very low. Initial claims for unemployment are falling, not rising. And inflation hasn't picked up yet. Now, again, that could change. But I thought it was pretty interesting to put it that way because I hadn't thought of that. The one thing that's been most affected was retail sales. Retail sales had its best month in a couple of years because a lot of people were rushing to buy stuff. We talked about how imports had risen significantly because everybody wanted to get them in here before the tariffs. People wanted to buy before the tariffs. So, the consumers spent a lot of money. And before we came into the room, we actually did show prep today. For an unstructured show, we did some show prep, and you made a very good point about the consumer.
The U.S. consumer, and it's like a psychological term, but it's called catastrophic thinking. And during times of chaos, the U.S. consumer spends money. And from COVID to 9/11, you see the data show that. So 9/11 is a great example because the consumer confidence in the country was very, very low. I mean, it fell by like 25%, but consumer spending fell by 1.3%. So, and then during COVID, what did we see? We saw people stockpiling on food and toilet paper and paper towel and all that kind of stuff. Whereas other countries and cultures, China specifically, they have a culture of saving. So during any time of crisis and chaos, they are saving, whereas we do the opposite. So it's really interesting. So we're hearing about tariffs, we're hearing about inflation.
Is this more than retail therapy? We always joke about retail. Like I buy guitars, you know, Ray buys something. I don't know.
I think it's buying ahead of things increasing, buying ahead of this, being prepared for a rainy day, so to speak. You know, if I lose my job or things really go bad, I want to make sure I'm stockpiled. I'm ready to go, and I can protect my family. And so I think it's a couple things. But we here in the U.S., we do have this doomsday mentality. And, you know, all this talk about consumption going down with tariffs, it's really the opposite.
Well, and we keep marveling at how the consumer can continue to keep spending. Now, in a little over a week, we're going to get the GDP number, which could be negative. And again, that has more to do with imports rushing in here before tariffs were going to be levied on them. So I wouldn't put a lot of stock. You just have to look at the PCE, the personal consumption expenditures. That's
on
the only
that
thing
data,
that's gonna
though,
matter.
right now, the data is showing that 1 in 5 Americans are buying more than they typically would.
Well, I think, you know, we talked about home equity loans picking up, you know, and that could be a sign that's where they're looking now, where they used to look before the financial crisis. Yeah. And we're shocked every month that they continue to keep spending, and they are 70% of GDP. So we have been underestimating the resilience of the American consumer to keep spending. You know, I maybe they're still, you know, recovering from the lockdowns and having all this savings just sitting there, because that's all gone now.
Oh, that's gone.
All right. Well, before we move on to other topics, we have to take another break for these important messages.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
What do you really need to know about buying or selling a home? First, it's serious business. And it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
All right, and we're back. So we have tariff scares, trade war going on, although the president did mention, kind of hinting that there may be a path to cut a deal with China, which would just make so much of this go away. That's where all the nastiness has been coming from. You know, it's like, well, they're just going to make up numbers to tariff. I'm going to tariff you $8 gazillion and whatever.
What do you make of the language that is being used, right? Because it's in a way, the administration is talking out of both sides of their mouth, and that's part of what's leading to a lot of the confusion. So what do you make of that?
Well, maybe it's like when I speak to brokers, like at times like now, that I'll get warned, like, don't scare them.
Right.
Or it's like, watch what you say. Like, you wrote that, no, say this. And I always say, I don't take requests. Yeah. But there could be something where they say, well, we're going to do this. And it's like, maybe we went a little too far with that. But I think the thing about politics is we don't know what goes on behind the scenes. I got to think that they're talking, you know, without telling us. And I almost think a lot of this is just prearranged. Yeah. Just think about like union negotiations. Every time a major union contract is ending, we see the building service workers here, or the government work. No one wants to settle before the deadline, because then it looks like you caved. Even sports leagues do this. So they go after the deadline just to make it like we got everything we could possibly salvage from this. So I don't know. I think when you look at some of the rhetoric, it's terrible, some of it. And you said that in public? Like, right. That's not good. You know, we both need each other here. It's clear relationship. And you're saying you have a good relationship with this country, then why is a public conversation the level it is? Right. Because it doesn't do a lot to make us feel like this is, you know, imminently going to end. We got that brief reprieve when he held up most of the new tariffs, but it's crazy. And that leads to the next thing that's scaring the you-know-what out of people, is the president saying that the Fed needs to cut rates. Everybody wants lower rates because they just think it's good for the economy without any problems at all. But look at the last couple of recessions. Forget COVID. Look at the financial crisis. And the administration said that Chairman Powell's, quote, termination can't come fast enough. So now there's the article, the argument of, can he actually remove the chairman of the Fed? Who knows? I don't know if this has ever happened. Powell's not going to resign. So I don't know where this goes. And obviously, this certainly does not help housing, because now people could say, well, we can't have this kind of craziness going on. And it's going to hurt our ability to borrow money. Mm-hmm. And it's hurting the value of the dollar, and it's hurting the stock market. Right. And that means mortgage rates are going to go up, not down. Right. So it's bad. You know, I don't know if it's more bullying, like a lot of this tariff stuff. I think it's just bullying, trying to get a better deal.
To your point also, what's said publicly and what's said privately. You know, are things being said publicly to appease certain groups, and then privately other things are being said? Obviously, we don't know that. But from the Fed's perspective, what do? Are you focusing on growth or controlling inflation? Like that is this.
The dual mandate is the stupidest thing that exists when it comes to the Fed. Your primary goal is price stability. Mm-hmm. That has to take, because you can't have anything. You see what inflation does. You cannot, again, it's the termites in the house. You have to get rid of inflation when you have it. You can't say, well, we're going to look at growth. Like, they still think they can keep two balls in the air at once. And what the last 3 years have showed us is they can't. Mm-hmm. They can't even do the main job they're supposed to do. So I think they have to remain.
This isn't out for them to do nothing.
Right. They have to remain independent. Yeah, of course they could say, like, look, we can't do anything until we know what's going on with these tariffs. And it's a way for them to punt until they figure out what's going on. And there's some legitimacy to that. And remember, we had a full percent of rate cuts last year that are starting to work their way into the economy. That should help. If it was as easy as just lowering rates, you could see that. And there are some economists, especially one I follow, who never wants rates to be cut, who's now saying, yeah, now's the time to do it. Mm-hmm. Because if the economy is really going to slow, which, again, the data is still not really showing a lot of that, you want to cut rates as soon as you think it's prudent, because it's going to take a while to really affect. Right. But remember, the 1% in rate cuts didn't lower your credit card rates 1%. It did nothing for mortgage rates, obviously, because there's no correlation there. So to think it's going to offer so much relief in the beginning, I think it's a little misguided. Mm-hmm. But, you know, it's something we don't need. It's like this list of things that we don't really need to happen all at the same time.
You're also saying, though, from that Greg Heym article, things aren't so bad, but then we're hearing from these leaders that a recession is
right.
Likely,
So
right?
Here are the scary things.
Yeah.
More than 60% of CEOs in a recent survey expect a recession in the next 6 months.
Right.
According to a survey from chief executives.
And like top-level CEOs.
Right.
These are influential people, for sure.
You mentioned Jamie Dimon and some of these other people that really know markets. The head of the National Economic Council, of course, says he doesn't see a recession this year. And that's his right, you know. But the other thing, so this whole thing is about protecting U.S. businesses and trying to get manufacturing jobs back here. And you can agree with that or not, but there was another survey where the majority of the company survey said that high costs is going to keep them from moving back to the U.S. So even with the tariffs, they may think it's still better. This is why I say don't expect the price of everything to go up by the amount of the tariff, because they're still going to be making money even if they're paying the tariff. Mm-hmm. So I think that's another aspect of this. So there's so much going on. I do this report last week in research where I put the most important articles, and I have to keep deleting things during the week because, like, okay, this was
they're not relevant anymore.
Well, now we've changed our mind. Right. It's like, it's horrible.
But a recession, so, you know, I think the last real recession we had was the great financial crisis. We had one during COVID.
Right.
But that was 2 months. And it was a really unique situation, obviously, and it was self-inflicted. So in reality, we haven't had a real recession since, 2009? Right. 2010. So we're looking at 15, 16 years, where typically you have a recession ever since World War II, a recession every 6.5 years or so.
And they typically last just under a year, about 11 months. And
But why is that? So why haven't we had a recession in 16 years, right? It's Fed policy. It's aggressive Fed policy.
Well,
it's low interest rates.
I would say it's
inflation was super low.
It's low inflation for decades. Enables the Fed to keep rates lower than they should. But you see what happens when you do it too long.
Right.
You get excessive speculation, irrational exuberance. By the way, you know Alan Greenspan's 99 years old?
I did not know that.
I just randomly looked that up before we went in here.
Wow.
So I think that's the thing. You could say, well, why can't we keep rates low? You know, it's good for everybody.
It also disincentivizes savings, right? So
that's the problem.
We are talking about people spending money even in bad times. They're spending money in good times too. And I don't know, I think we were talking about this earlier in terms of, you know, what is it? Something like 40% of Americans don't have more than $250.
I mean, they can't pay a repair bill.
Right. So, you know, I think having a recession, you know, look, it's not something anyone ever roots for, but sometimes it's needed.
Well, for us, being real estate is our business, full disclosure, of course, a recession, and I've been talking about this for the longest time, that you don't want to root for it because you don't want to see people lose jobs. You don't want to see companies go out of business and people talk about their 401ks going down. But it does solve real estate's problems because it will lower mortgage rates and it will lower home prices,
right?
You know, and potentially create more inventory. That, again, I'm not rooting for that, but
in the broader sense, though,
when you don't have a recession, prices don't reset. And we saw that particularly here in New York City. You talk about, you go from the financial crisis, like you said, all those years. And by the time 18 and 19 rolled around, the market was pretty quiet here because prices had done nothing but gone up for a decade.
Mm-hmm.
You know, there's this huge correction after Lehman Brothers, about 25%-ish, depending on the high end, took a bigger hit. And then, you know, you come back and then they keep going up and sellers aren't going to negotiate.
Right.
Have you seen the stock market? You know, have you seen the economy? There's no recession in sight.
Yeah.
So I think you do need to have corrections. So you see stock market, they can happen in a day or two, you know, if things get crazy, and we've certainly seen that.
Yeah.
It's a little harder with housing, especially when inventory is so low. Yeah. But all right. So I was just
going to add that at the other end, when a recession is over, you tend to see good things happen, right? And I think you see a shift. I mean, right after the financial crisis, you saw this boom in new industries and new companies, you know, from the biggest one being D2C companies. Direct-to-consumer companies started thriving. You know, when people were not trustful of bigger banks and bigger corporations, you saw companies like Airbnb and Allbirds and Harry's Razors and companies like that, where it was all these D2C companies started booming, and you see a shift. And I think you could see something like that happen also on the heels of, you know, I don't know what industry it's going to be or how the consumer ends up shifting, but those things aren't necessarily bad.
Well, look, we have
Innovation,
to adjust.
It's you know,
recessions are inevitable, and you know it's. I think that we have to learn. We almost have forgotten what normal is. We seem to only know really good times and really bad times. It seems the middle's kind of gone, you know.
But that's also how we talked about that. We've talked about this. How, you know, media is so big right now. Yeah. Everyone, you know, there's Substack, there's so many newsletters, there's so many, you know, platforms now. So they thrive on, you know, the old adage that if it bleeds, it leads. Yeah. And so everything is catastrophic. But to, you know, where you started with this, with Greg Heym's article, if you're not on social media, you might see a different picture.
Yeah, it'd be a lot calmer for sure. I tell my son that all the time, but he does not listen. All right, we have to take one more break before we finish up.
I'm Scott Nadler, one of the nation's top mortgage originators, and I'm here to help you take control of your mortgage. Ready to lower your payments or pull out cash for life's big moments, I've got the solutions you need. With over a decade of experience, I'll make your refinance a breeze from start to finish. Don't wait. Call me at CrossCountry Mortgage today, and let's start saving you money.
All right, well, let's just end with a little bit about housing and what you're seeing. We've seen that the share of borrowers applying for adjustable rate loans, highest level in over 2 years. Now, are you experiencing that personally? Because look, we had said for a while, and you kept pointing this out very accurately, that mortgage rates had been stable, like predictable, drifting lower. That went out the window. You know, they were up 20 points last week, basis points last week. So you're getting a lot more of those calls now saying, hey, how does an adjustable look?
We are. I think the overall common sentiment, more so now than it's been in a while, is clients are calling and saying, we know rates are going to be lower in 12 to 24 months. So
I'm glad they know that. I don't know that I
right. So I don't know for sure, but they seem to know, or they seem to be a little bit more confident, or statistically speaking, they think it's more likely. So let's inquire about an ARM. Now, if you are selling your loan directly to Fannie Mae and Freddie Mac, the ARM rates are not all that attractive just yet. They're in line with a 30-year fixed. If you're working with, now we have access to smaller banks or a credit union that will portfolio their loans, those ARMs could be very attractive, where in some cases it could be 1% lower than where 30-year fixed is. Right. And if that spread is that wide, it's definitely worth the conversation. Absolutely.
Now, you know, there was all this fear of adjustable rate loans, particularly during the financial crisis.
Oh my God, but we still hear about it. It's amazing. 16 years later, we
never
turned
out that bad, though, did it? Because when people had to, I mean, there was issues, I guess, of the value of their home and what may have happened to it, or their credit worthiness. But in terms of purely a rate standpoint, they were able to lock in very attractive fixed rates after that.
During the financial crisis you're talking about?
Yeah. I mean,
well, I think the types of programs that were available then are not available now.
Okay.
So after Dodd-Frank, you know,
you mean ninja loans don't exist anymore?
Ninja loans don't exist. I mean, you might have some random bank somewhere that will do them. That
would
will not
be funny.
That will not be in business anymore.
Yeah.
But you would have these adjustable rate programs that kept your rate and in turn your payment super low for 2 years,
right.
And then maybe it was interest only.
Interest only.
And then all of a sudden, the third year, it would be principal and interest plus your rate would pop up. So your payment's $800 a month for 2 years, and all of a sudden you get a bill and it's $2,000 a month. So those types of programs don't exist anymore. At least like maybe in the fringes somewhere, but they're not around. So now if someone's taking a 5, 7, or 10-year ARM, these are 30-year loans. They're just broken up differently. So if you take a 7-year ARM, the rate's fixed for 7 years. So from now until 2032, your rate cannot change. If you want to refinance, you want to pay the loan off, you want to sell the property, go for it. There's no prepayment penalty. Starting in the 8th year going forward, the rate's going to adjust every year. So year 9, 10, 11, but it's a 30-year loan.
I've always wondered this. Sorry to interrupt, but what
it's
percentage?
Your show, Greg.
Well, you're kind of sponsoring it, but anyway, what percentage of mortgages have prepayment penalties?
So now, if you're a Fannie Freddie loan, or very few loans right now would have a prepayment penalty.
Okay.
Very, very few.
Because I would think people wouldn't want those loans.
No, it's very rare.
Okay. Now, because they act like, when you get a mortgage, they act like it's common.
It's one of the most common questions we get asked. And on their initial disclosure document that they get, there's a clear question: does this loan have a prepayment penalty? Yes or no? And again, it's highly rare to have a prepayment penalty right now.
You got it directly from Loan Daddy himself.
It's true.
You get that's got to be true. Still no word on my hats or what my handle's going to be, but maybe we'll have a fan vote. Send your suggestions to
we
CTL
need the Greg bobblehead
at bhsusa.com. I don't have hair though. Look at Patino's hair; it's perfect.
You don't need hair.
Even
You can get a
Alfred E.
hat.
Newman's got hair. It looks good, better than mine. Right, Ray?
Diversify. You need someone without
I need
hair
some
up
ball
there.
guys. We need a
Some
Yul
ball
Brenner
guys.
bobblehead. Can we find one of
there
those,
you go.
please? You never know what you could find bobblehead wise. Oh, another interesting thing that came out. There's a survey of home sellers. 81% of them said they still believe again, this is probably before the trade war. They believe they'll get their asking price or more this year. This is a Realtor.com survey. If we asked this week, what do you think that number might be?
I don't know.
You think it'd be 81%?
I don't know, but it's like someone with a 2-year-old kid that says, my kid's an amazing artist. Like everyone thinks like their kid's amazing, or they think their home is going to sell.
Special. Of course it is.
Special. It's going to sell over.
Greg Heym slept here. I could be able to sell my home
Right.
for that alone.
Right.
Maybe I'll leave a guitar behind so they have something. Then I could buy a new one. So
There you go.
okay. That's I've held off on the guitar buying for a little bit. My wife is a little complaining there are too many guitars in the room. It's supposed to be our guest room too. And we can't even put a bed there anymore because there's too many guitars.
You should, sorry. You should tell her that,
Scott Nadler said it's okay.
you should tell her no, that as a U.S. citizen, I need to have
I have to try
catastrophic
civic
thinking
duty
like
to
most
buy.
people. So it's time to spend money when there's chaos.
Now, can I get specialized loans for guitar purchases? We don't have that.
You can contact the loan daddy and we'll.
Well, so to sum up, I don't know if we've given you a lot of answers. The thing to remember, though, is so much of what's,
If you're more confused now than you were before the show, then
Blame loan daddy.
You are
You're
really
like
paying
us.
attention.
No, I think the thing to remember is we're not in a crisis. This isn't a financial crisis. It's not COVID. There's a lot of things that are going on that are scaring us, but none of those things have actually come to fruition yet.
It's talk, a lot of talk.
It's a lot of talk that's rattling markets. And we saw when we had the pause in the new tariffs, or most of the new tariffs, stock market shot up. And we thought, all right, it's going to be calm for a while. And then the next day it went down. You go, wait, that's not supposed to happen. It's bizarre world stuff.
Yeah.
And then the next day stocks went up. It's just spin a wheel,
Right.
About that. I think, again, long term, if we're thinking long term about investments, whether it's your 401k or a home or any decision you're going to make, it's hard not to be rattled by all this. But again, this is where planning comes in. If your investments are, using historical methods of allocation, if depending on your age or your risk tolerance, then these times do become a lot easier. Remember, people could say, my 401k has lost this amount. Have you taken it out? Have you sold any of your investments? Then you haven't lost anything.
Right.
It's like the equity in your home. Doesn't matter until you sell it. So
I feel like markets are like hypochondriacs right now. We all have that
it's like
friend
Felix
that has.
Felix Unger for the Odd Couple fans out there. There was always saying he had something.
We have so many Odd Couple fans, by the way. So okay.
What? It's one of the greatest shows. You're like Odd Couple. What's that?
No, but we all have that friend that has like an ingrown hair, like a ingrown nail or something, and they think like they gotta get their hand amputated.
Yeah.
It's like I think just maybe.
It's like my mother. It's like I feel dizzy. What do you mean? She goes, it's a little dizzy.
Right.
It's like, you want to go to the doctor? No, it's not that dizzy. So yeah. I kind of have a feeling for that.
Yeah.
But look, we'll stick with the facts as best we can, and sometimes it does look best right before the recession. We certainly saw that during the financial crisis. COVID is a different animal. Let's be honest. The tech bubble bursting was the recession before COVID, not COVID, before the financial crisis, and that one a lot of people saw coming. So again, the most common cause of recessions in this country is bad Fed policy. The Fed is responsible for the vast majority of recessions, usually by keeping rates too low for too long, encouraging speculation. Then you get a financial crisis or a tech bubble bursting, and you see what happens.
Right.
And then we rely on the same people to get us out of the mess, which is fun. So where does this all end? I wish I knew, because, I'm driving myself nuts, as I'm sure a lot of people are trying to keep up with the news, trying to stay informed. But it's
But you know what?
unrelenting.
I can also say, from my perspective, sitting next to you as an economist who's studied this for 30 plus years, you have.
I think you just called me old. Go ahead.
I'm just stating facts, just like you. Hearing you talk about it and kind of go through it in a very rational way is very comforting. So I think people just hearing it and that, hey, if they're confused, it is confusing. There's no way around it. But let's break down what the confusion is.
Right, and you shouldn't feel that it's your fault you're confused or scared or panicked. How are you supposed to respond? You're hearing people say that the worst things are going to happen. Recessions, market crashes, all of these terrible things. trade war, the fact that it has war, and we actually have actual wars still going on. It's a lot to digest. And in a social media world, you can see the nastiest things going on. And it's all about headlines too.
Yeah.
No one's ever gotten a big audience by saying things are okay.
Right.
That's part of it.
The Weather Channel ratings are very low when it's 80 degrees and sunny.
No, but you have hurricane threats, and I got a brother that's obsessed with weather. He's like, it's bombogenesis. I go, what does that even mean? I said, what happens when you hit Phil Collins' Genesis? See, Ray might get that joke.
I got that one.
All right, well, it's like, I know Phil Collins.
Peter Gabriel?
Peter Gabriel maybe is a little foreign to you. Anyhow, well, we'll leave it there. Thanks, Scott Nadler.
Thank you, Greg.
Thanks to Ray and Lena. And, we'll keep doing this as best we can. If you do have questions, again, ctl@bhsusa.com. If they're answerable, we'll try to answer them. And we're not pretending to have the answers here, but as quickly as this was unleashed on us, all this chaos, it can go away almost that quickly. And we certainly saw that during COVID. We had the V recovery that people swore we were never going to have. Mm-hmm. And remember that right now, there's not really a lot to recover from except the stock values that have been lost. Again, that haven't been lost unless you've sold. The economy still looks pretty good. We're going to have a lot of data in the next 2 weeks. We've got the PCE data. We've got GDP data. Then we got a jobs report coming, first Friday in May. And we'll see. We'll really see if the economy is holding up as well as the data has so far. And then maybe we'll feel a little better about things.
That sounds good.
So hopefully you'll join us next week when we cross the line again.